Welcome to the Roetzel Health Law Hotspot. Health Law Hotspot is a podcast for physicians and health professionals that covers the legal issues and trends that affect the healthcare industry.
Hi, everyone. Welcome to the Health Law Hotspot. I'm Ericka Adler, shareholder at Roetzel and leader of our healthcare practice. And today, I'm joined by Brad Burch. Brad works with Business Incentive Solutions, which is a team of tax and incentive program specialists to help businesses claim lucrative tax credits and incentives. Now, you may be wondering, why is Brad here? What are we going to be talking about? I think this is a really great topic for my clients that are out there, are dental practices, healthcare practices, medical practices, and other types of healthcare providers, because you may not realize that there are apparently, I didn't know this either, a ton of tax credits out there which are available and can come right to your bottom line if you're talking to the right people who can help you. So really excited to have Brad on today, and we're going to be talking about some of these tax credits, and I'm going to be learning along with you. So welcome, Brad. Nice to have you here.
Thank you, Ericka. Glad to be here.
So why don't we start off by you telling us a little bit about what these tax credits are and why we should care and whether it really even applies to medical and dental practices and other types of healthcare providers.
Sure. So let's talk specifically about medical providers, doctors, dentists, chiropractors, all specialties can take advantage. Now, you had mentioned there's lots of tax credits out there. At last count, there's over 700 different tax credits out there available to small businesses. But for the purposes of your audience, the one that's going to be the most lucrative or possibly apply to them and to their bottom lines is the R&D, the research and development tax credit. It's not a new program. It's been on the books since 1981, and it's got a rich history. But this is a credit that a lot of doctors and dentists that they just don't realize that they qualify for this money. So here's how this section of the tax code works. And if you want to be a geek and go look this up on the internet, it's IRC section 41. And if you're owning a practice and you're treating patients, no matter what your specialty is, there's a process that you have to go through. When a new patient walks through the door, that involves you diagnosing. It involves you coming up with a course of treatment. It involves you implementing that treatment protocol. It involves you making tweaks and changes to that protocol all throughout the process. You might also be involved in discussing this with your patients. You might have to bring your staff in on the educational portion of all of this. All of these are behaviors and activities that the government defines as R&D. So what we do is we come in and we look at your practice and we quantify that. The taxing authorities require a study be done, and a study is done by a firm like ours, a tax firm like ours that specializes in this. And we come in and we quantify based on what the daily activities are of that practice and which employees are involved, and we're able to do an analysis fairly quickly and accurately to show what, if any, monies are qualified to that business. And here's the beauty of this. We're allowed to go back to the last 3 years of the tax returns for that business and apply for these open year refunds that those clients were due that they didn't know about, and get that money back to the doctor or the owner of the business. And it goes right to their bottom line. They've already paid into the system. They've already paid the taxes on this money. So whatever we recover for them, and on a small practice, that might be $40,000, $50,000, $60,000, but it can be in the millions of dollars for a larger healthcare facility. And again, it goes straight back to their bottom line. And this is not a one and done process. 90% of our clients come back to us every year at tax time and filing time and say, hey, you got us that money back last time around. Can you look at it again and see if we qualify again this year?
Wow. So is this something that a practice's accountant would not know to do when they were just filing their return?
So this is a very specialized area of tax law. Outside of my existing clients, my number one source of referrals for this business are CPA firms. Now, if you're a client of the Big Four, one of the Big Four CPA firms, they have divisions in-house that are devoted to the R&D tax credit. And if you're that big of a fish and you have that type of CPA firm on staff or contracted to, you're already getting this done, I'm sure. But here's the thing, this is such a specialized area of tax law that most smaller firms, anything under the big four, probably don't have expertise in-house. I occasionally run into firms that do, but most of them can't know everything about every section of the tax code. And as I said, if you go look up section 41, it's many, many pages. So CPAs are happy to refer us to this. It's not uncommon that they know about it, but they just don't know the mechanics of the law and how to file for it.
So if you go ahead and apply for this and you get some tax back and you said you go back 3 years, does it ever trigger kind of an audit or review of the practice, which obviously is something nobody wants to get into?
Exactly. Well, 99% of people don't want to get into that. That is the number one concern / objection I have when I explain this program. So all I can tell you is our experience. And first of all, as you know, you can get audited anytime for any reason, or even no reason at all. Some audits are completely random. But in our 20 years of filing these, and we filed almost 10,000 of them in the past 20 years, this in and of itself has never once triggered an audit. Think about it. This is a program designed to reward and incentivize small business owners. It wouldn't make sense that it was punitive in any way. But due to the random nature of audits, and when someone is audited, they go in with a microscope and look at everything. We do get pulled into audits. Now, fortunately, it's part of our contractual agreement with the client that should they have anything in terms of questions from any taxing authority up to and including an audit, we will absolutely 100% back up and represent our work. We don't charge any additional fees for that. And it does occasionally happen, but not through the action of filing for these credits.
So do most people end up getting some kind of credit? Do you ever have any that just don't qualify at all?
Yeah, we do. Honestly, about a quarter, 25% of the clients that we go through our free analysis with, there's either not enough credits there to justify a filing, or they just don't qualify. If that's the case, we have to issue a no recovery letter. That's what we call it. There's no charge, there's no fee, there's no harm, no foul. We say there's not enough activity that we can quantify to justify the filing of a credit, but we'd be happy to look at it again the next year. And of course, there would be no fee for subsequent reviews as well.
But you think with the type of activities in which physician and dental practices engage, that they would likely qualify based on their activities?
No doubt. This is what it's going to come down to with a medical practitioner. Have they been profitable enough, i.e., have they been paying a lot of income tax over the last 3 years? It's almost a no-brainer that they're going to qualify for some portion of their business towards R&D tax credits because of what I mentioned at the outset of this interview. It's going to come down to have they paid enough into the system? Is there enough past tax liability? I might be able to get a practice credits all the live long day, but if I don't have tax dollars, tax past liability paid into the system, I've got nothing to apply the credits against. And our business model is to get cash refund checks from the IRS or the franchise tax board in that municipality or city.
Right. Now you mentioned they can go back 3 years, and so is that the most they can go back? And if you do a repeat year, you kind of go back a rolling 3 years. So you look at the prior year and then you peek at the prior 2 to see if there's something you could have done differently, or how does that work?
Yeah. So an interesting thing about these credits is the IRS allows you to bank them or hold them on the books and carry them forward for up to 20 years. So sometimes, I have a situation where a client, there's so many credits there that we run out of tax liability to apply them to. We can't use all the credits. So wow. Yes, we keep a file, we keep them, we keep a track. We don't charge the client for the credits until they actually use them. So when we look at them on the next year's return, we can, like I said, carry those forward for them.
Now, I know you mentioned that these credits have been around for quite a long time, and kind of crazy that more people don't know about them. I mean, I didn't know about it until recently. And then you mentioned also that they're expanding them now as well. Can you tell us a little bit about that?
Well, let me give you a brief history. This program was rolled out in 1981. Back then, we were kind of in an economic malaise. They wanted to stimulate the economy. And much like now, there's a paranoia that China's rising and going to take over as the number one economy in the world. We thought Japan was going to be our arch rival back in 1980, 81. So this law was originally passed to incentivize US-based businesses, at that time manufacturers, to be more innovative and creative and to reward them and incentivize them to, be more successful. And they had an ulterior motive. They wanted to grow the tax base. A company that makes more money is going to expand and hire more employees and increase the tax base. It worked so well. We came out of that recession with a roaring economy for the next decade. It was never meant to be a long-term law, but it was renewed year after year after year. And then it began to be expanded under successive administrations. And then under George W. Bush in 2003, they changed the requirements, the reporting requirements, and opened it up to smaller businesses. If you're a Fortune 1000 company, you might even have an R&D department in-house, and you've got bandwidth and resources that are tracking R&D activities and behaviors. But if you're a mom and pop and you have 10, 20, 30 employees, you don't have an R&D time clock. You're not tracking it that closely. So there are allowances made for that. And we're allowed to do estimating, and we're allowed to do certain things with a small business that wouldn't be required necessarily in terms of what a big business has to do to track and justify for these credits.
So the expansion that they're talking about, is it to make more businesses, have access to this? Is it to give them more money, a bigger look back? Do you have any idea?
Well, that was, like I said, that was up till 2003 when they made it easier for small companies to apply. It was finally made a permanent part of the tax code in 2015 under President Obama. Now, there's two bills in the House and Senate right now. They're looking to expand this program yet again. I can't speculate on what that expansion is going to entail, but it is going to make it even more of a lucrative program for small business owners. But again, at the same time, there might be changes or increases in the reporting requirements. We don't know until that's all laid out in the law. Interestingly enough, the IRS rolled out new guidelines last week, first time in a long time, as far as filing and reporting requirements. So we are this week scrambling and in the midst, because they went into effect immediately, to change all of our forms and processes to meet these new filing requirements.
Wow. Well, they definitely like to keep you on your toes, right? So
yeah, it's better than us waking up and finding out that the law has been abolished. So
yeah, that's true. I mean, or that they retroactively changed it to your detriment. That would be pretty bad as well. I know a lot of people were concerned at the end of the year about changes in the tax code, and we were pretty crazy trying to close deals because of that. So,
but in answer to your question, it's not going away. If anything, it's going to be expanded. We're full steam ahead.
Awesome. All right. So I think what we've learned today is that there's just some things that small practices don't know are out there that could really help them. Their own CPA may not know about it, may have heard about it, but not have the expertise, and may not be working with anyone who knows how to help them get these credits. So if you don't get anything out of it, it doesn't cost you anything, but from what it sounds like, you guys really do retrieve a lot of money for the client, and they have nothing to lose. Is it super intrusive to have you guys come in and do that study? Does it interrupt the practice, or how does that work?
Not at all. As you might imagine, after 2 decades and over 10,000 or almost 10,000 filings, we've got this somewhat automated, and we've got a data set of existing clients that make it fairly easy for us to go in and do this. So when we do our initial no-cost analysis for the client, we look at their last 3 years and we pick what appears to be their best year, and we do a fairly deep dive on that. So again, the client's going to submit us their tax returns, of course, after us signing a confidentiality agreement with the client. Nobody ever sees their documents except our tax team. They're all licensed, bonded, insured professionals. And I'm going to go through 40 yes or no questions with the client. And that's all it takes, and then of course, name, rank, and serial number. How many employees do you have? What kind of entity are you? How many locations do you have? What are your revenues? We turn all that in. If it takes more than 20 or 30 minutes of the client's time to do that, that's a lot. But if we turn all that in, and within a couple of weeks, I'll have an answer as to whether or not there is a there, And like I said, a quarter of the time, and the answer comes back, there's not going to be enough there to file for. But if there is a there, they'll give us a conservative estimate on what that 1 year return or refund will be. And then the client and I can extrapolate out, well, what would it be across all 3 years? And like I said, up to that point, they've probably put well under an hour into this. If they do move forward, it's a 1-page consulting agreement. As an attorney, you'd have a heart attack if you saw it. It just says, I'm hiring this company to go file and get these refunds.
Right.
I agree to pay them a third of whatever they get back for us. And I need a few weeks to prepare the documentation, including this 70, 80-page study that's required, and bring that back for signatures. At that time, we ask for half of our fee at the time of filing. Now, I do want to point out that with the COVID situation and everything, the IRS shut down 2 summers ago and had to retool and send everybody home and get them working from home. And they lost several months of productivity, and there's still a couple million returns behind on processing. Part of this process is filing amended returns, which amazingly in 2022 is still done by paper with the IRS. That's the only way to file amended returns. Prior to COVID, these things went through pretty smoothly, like clockwork. They came through in about 3-4 months' time, these refund checks. But some of them have slipped to as long as a year now. Now, we're hoping these new requirements they've sent out on filing are going to speed up the process. But all in all, if we do move forward and the client hires us, it's usually maybe another hour or two of me, again, gathering data with the client that might include things like payroll numbers. But if I'm getting back the client $100,000, it's pretty easy to justify a couple hours of their time. And they might even hand me off to a supervisor or somebody to do it. The actual business owner might not even be involved in that phase.
Wow, that's great. And I think you mentioned that even though like a quarter of people may not be the type of client that's going to get any money back, usually the type of business that healthcare and dental practices are in, they're, less likely to be part of that group in terms of qualifying, not because of their services. They may not have enough taxes out there, but their services generally are the type that would qualify.
Yeah, absolutely. So if they're a newer practice or they haven't hit that, they haven't turned that corner and hit profitability yet, I might not be able, to help them. As I said, they might qualify for credits because of their behaviors and expenditures and activities, but we might not have enough tax liability to apply them against. Again, no harm, no foul, no bill.
Right.
We'll look at it again next year.
Perfect. Well, I love that. All right. So any final thoughts on this topic that you want people to be aware of before we wrap up?
Well, there's a couple more myths I just wanted to address. I think we hit the fact that, you can be a small company and qualify. For a long time, you had to be a large company, and that still persists out there, that belief that only big companies qualify, and nothing could be further from the truth. The other myth that's out there about this is, well, you have to invent something new to qualify for this. And you know what? In the early days of this law, the way it was worded, you had to come up with some discovery or new knowledge that was new knowledge to the world. Well, that was a pretty high bar.
Right.
Yeah, the way the wording works in the law today is you have to discover new knowledge that's new to that business or that business owner. Now, who's not running a business today, whether it's a medical practice or any kind of business, where they're not out there every day and having to, come up with new and better ways to do things. So you don't have to invent something new. You can modify an existing product or improve an existing process. It doesn't even have to be a physical product. So there's companies out there all the time that are innovating and coming up with better ways to skin a cat, better ways to build a mousetrap. And again, those are the kinds of things we're looking for and trying to quantify.
That's great. Well, thank you so much for coming and joining us today. I hope everybody finds this really helpful, and you can certainly reach out to Brad with any questions that you have. And I can also try to answer questions you have, but don't know how good I'll be at that. But I find this really fascinating. And I know that a lot of our practices are just very busy practicing medicine, dentistry, otherwise, and they don't realize that there could be some good cost savings out there. And I know that's one thing that they are really interested in, is getting some of that tax money back and, improving their bottom line. So this is right up their alley.
Yeah, that's an interesting point you just made. A lot of business owners, and especially medical practitioners, they come into the office every day, they have their heads down, they're treating patients, and they don't realize, they think in their minds they're just doing their job, and they don't realize they were engaged in these types of R&D activities all along. So that's our job, is to help them learn about that.
Great. All right. Well, Brad Burch, thank you so much for joining us today. It's been really insightful and I believe super helpful to our audience. And thanks to all of you for joining us at the Health Law Hotspot. And join us next time. You can see all of our podcasts if you go to ralaw.com, and we hope to see you next time. Thanks, everyone.
The Roetzel Health Law Hotspot is made available by the firm and its attorneys for educational purposes and to provide general information, not to provide specific legal advice. Use of the Roetzel Health Law Hotspot does not create an attorney-client relationship between you and the firm or any of its attorneys. The Roetzel Health Law Hotspot should not be used as a substitute for competent legal advice, and you should contact an attorney in your state about any legal needs or questions you may have.